Testing, testing, testing. I'm back. All right. It's July 1st. June monthly candle close. Check. Second quarter. Check. Higher time frame. I'm always looking at monthly closes, quarterly closes. Super duper important when they happen. Just go through. I'm going to go through the precious metals complex. We're going to look at GDX, GDXJ, SILJ, and we're going to take a look at silver and gold. Are they overextended? What's up with that? But I'm not going to look lower than the monthly chart for those. Really keep it high level, because if you like the buy right and sit tight, that you can't apply that to weekly charts or daily charts. Buying right is being synchronized with a higher trend, at least the monthly chart, where you have a clear signal, and then you know you have the trend behind you, you bought right, and then you sit tight and you wait for those monthly candles to add on. No noise. So let's get right down to it. Let's start with JDX. I posted this on Twitter yesterday. I try to keep this chart super simple. Here I have volume defined breakout level. I love that. It's often very close to the actual close of the candle, but that's where you have the synergy of it's like a magnet, right? The volume, important price action attracts volume, attracts buyers and sellers where they think it's fair value. There's a fight between the bulls and the bears, and it just accumulates. So right here you see the peak of a volume around 2250. And that's all this area here. So you have volatility above, gets extended, come back around, and then you start coiling. And once the price action busts above, that means it's seeking now a new fair value. So that one, there's a game changer, there's a new macro driver. The price now has started unlodged from that attraction to the magnet, and it's seeking another magnet. So as soon as all these little metal particles, they just float around until price action, starting to discover resistance. People say, okay, that's went far enough, I want to take profits, and then you start creating volume nodes. So this is a high volume node, and then after that, this is another volume node, and then you get smaller volume nodes here. And you see here, not much volume nodes defined. So all this here, strong base, and right here, it could stop at any moment. But I see this as a vacuum. And you see it here. Somebody without even having volume profiling, they could just look at the chart and you see how rapidly this fell down. Not much volume here, not much. If there was really an important price action here, buyers and sellers would slug it out and you have a consolidation. It wouldn't sink like that. So it wasn't considered fair value. It just vacuumed all the way until it found the important price action where it wanted to consolidate. So that's why I believe, and often you see it with the arcs, you've seen the North Star do it, other people, the angle of entry into a base is often the angle of exit. That's because it's a vacuum right here. There's no volume defined resistance here, and there was no volume defined support. And so that means that support can be converted into resistance because it's just not there. And you see it here, the miners have already proven that once it closed on the smaller time frames above 29, or you'd have to look a little bit closer, it's just vacuuming up. Closed the quarter really strong, and I think within 3 months, maybe the next candle, maybe a little bit more after, we should be reaching these higher levels up here. Might slow down a little bit here at 44.50, and after that we're going to be at 53.50, guys, for the senior gold miners. So they're really ahead of the pack. They've been following gold, already broke out above the 2016 highs. When you see that, the rest of the field gives you high hopes, high probabilities that their possible upward moves will be followed. All right, let's look at the senior miners for silver. There's something I like, since I'm relatively new compared to these old timers in the precious metals complex. This, I always like to look, you see in ETF, they call it the senior miners, but when you go look, it's like this is heavily weighted WPM, Wheaton, precious metals, or the top 2 or 3 holdings. They're like over 50% of the weight. So it's kind of weird. I don't know how they do it, But if ever you come and you see how people, senior miners, will actually look at the holdings, and then you could check individual charts, market caps, if you want to deep dive that, to really make sure you understand what you're buying. Same thing for SILJ, the juniors. Fully on gold time told me, look, Pat, these are all big caps. Where's the junior in there? And I guess he's right. So you got to really check out that. All right, guys, back to the chart. Senior miners, look at that. This is the close. So here I had some volume defined breakout line right here. I had another volume node right here. This is the main volume node also here. We went through that. So we're already starting to slide up. We're already detaching from that fair value magnet, and we're seeking a new one. And that's why, look, where's my next magnet? Well, my next known magnet of importance is all the way up here at $75. Arcs, beautiful. Descent, exit. You could even have another arc here. The entry, the exit, same angle. I measured here the number of quarters from the apex to the candle down, I think around. So July 2021, we should be reaching that top of the arc, guys, for the senior miners. Pretty sweet. And it's all synergy, right? So you see the senior gold miners now, and you see the senior silver miners starting to move up, and it's already maybe in the next quarter it's gonna catch up here and break out above its 2016 quarterly defined highs right here. And after that, the quarter after that, maybe make a rush up. So it could even happen maybe before the next 4 quarters before next year. But keep an eye on that, and that's very constructive setup right here, breaking out above these volume defined breakout levels on the quarterly chart. Juniors. All right, gold junior miners, quarterly chart. I use the arc. I like using different techniques all the time, mixing it up, using different angles, but trying to keep it simple at the same time, not to put too many different techniques. So the best is to have do multiple charts, then use 1 or 2 maybe indicators, and try to see if you could skew your view just slightly different than the previous time you did it, and just to confirm that as a whole, the weight of evidence is still angling in the favor of a bull market, because you really want to see if those technicals start breaking down, especially on the higher time frames. You got to really consider bailing, right? So anything you do on the smaller time frames, okay, I didn't call it very, very well. Like sometimes I dabble on the 1 hour and the 4 hour, and as soon as I say, oh, it's going up, then the price action reverses. Well, that's mostly having fun. I'm not using that to day trade, because I'm position trading I want to play the bull era. I want to play from the start all the way to when it tells me to end. I want to maximize maybe some exits, take some profits, and add on pullbacks. But I'm going to do that on monthly defined pullbacks, not on the smaller time frame pullbacks. If I trade at that frequency at that time frame, I won't be able to sleep well at night. I might miss a big move on the way back up. But on monthly defined, if you hit resistance and you know, oh, it's going to come back down, that could be the opportunity to take some off and add some down here. But it's always a risk. So you got to do it according to your trading profile. Gold juniors, just beautiful. Distance from apex when it went down, distance from apex. So I got next quarter or the quarter after. So 3 to 6 months. Look at that. Clear breakout on the quarterly chart, guys, for the juniors. So now we had the gold miners, seniors breaking out above their 2016 highs, monthly quarterly defined highs right here, breakout line. Now we have the juniors on the gold. So the only thing we're missing right now is the silver miners to do that. Gold has done it, and so the whole gold complex is broken out completely. Gold juniors, gold seniors, all broken out. Vacuum here, same concept. Look at that. Look, there's volume here, but it's so tiny. And we're right here. Look at this. The slide should be really accelerating. So I don't doubt that we're going to be able to hit those 76 targets really fast for the juniors, guys. All right. Okay. The juniors. So, and after that, we're just going to finish up with the metals themselves. Silver juniors, which are principally large caps inside or big caps, 2016. So them silver, it's them that are going to start catching up to have those targets here at a quarterly defined resistance right here, about 1550. But what I'm looking at is here. So a lot of people, look, Patrick, 1250 has to close above that. Well, since I've been looking at volume profiling, and especially on a higher time frame, we're really past that peak. We're starting to slide down. So before it goes back, this is support. Was previously like a war zone, my resistance, my support. But if you're above it now, that is volume defined support. So I see this already, a first breakout, a volume defined breakout. After that, that should give us enough momentum to have a monthly candle or quarterly candle breakout confirm. Maybe in this quarter here, we're going to close above in the next few months. And if we reproduce this move right here, we have an analogous move, then easily I think we should reach that bust above those 2015, 16 quarterly defined highs, and even all the way up here to 1925. The juniors really, I think, the lowest risk, highest reward if you want to play the ETFs between the GDX, GDXJ, SIL, SILJ. From what I've seen before, my analysis is the juniors really are going to give you more bang for your buck. But you see right now, just confirmed right here, not extended like the JDX is. This is really just starting, and still a lot of worries, a lot of there could be some resistance right here. So you have another volume node right here, but it's really decreasing. The bulk of the support right now is behind us, so the resistance now support. So it's really looking good for the juniors. All right, guys, 2 more charts or 3. Let's gold monthly log chart. Am I overextended? This is overextended, it's time to sell. If you want to do the buy right, sit tight, look at monthly chart and above quarterly charts, because the buy right and sit tight on the weekly and the daily, maybe weekly you could get away with it, but on the daily chart, it's you're just going to get whipsawed. It doesn't make much sense, right? This is what happens. So I'm trying another technique. Okay, bring out the Bollinger Bands. A lot of people looking at that. And I want to look, when has the bull market ended or entered severe corrections? When you have a close above the BB8 on the monthly chart, a good close above, you're going probably in a sideways move, consolidation, until it resets, softens up, and then continues. If you have a close above the Bollinger Band on the monthly chart and a great, nice upper shadow, big wick, that means a lot of selling pressure during the month. That's a big warning sign. We've seen this is an example of in January, at the end of the 1970s bull run, and after that, just bam. You always get a second chance, goes back up, but they created a lot. There was a hard wall right here, a lot of resistance. How is it looking today? Well, in 2011, same thing. Even here in this important pullbacks, but not signifying the end of the bull era. You had some wicks above, sometimes just a candle, but with a small wick. See, you went in consolidation after for a little while. But right here, we had like the twin towers, the twin peaks, I call them. And the first one, close above the BB8 and a wick, a good strong wick, big warning signal. Goes down, yeah, the bulls pretty much hurt, trying to go back up. It's not working. This is a big flashing lights that you could have issues right here. See that wick coming out? It didn't have a close above, but you had a sideways move for many months. Same thing here. So you got to look out for these things here. You see, you had the close above, sideways move. Okay, Pat, we're extended. What's happening? Gold is went up too much. Well, look at that. Look where we are today. Gold futures, 1800, never closed above. Right now, even the more it consolidates sideways, it's well below the BB8. It's at 1862, and now the price action we're below 1800. So there's a lot of up room to have strong moves up. So keep an eye on that. Every month you could check out the BB on the monthly chart for gold. But until you have this close above, and for the total weight of evidence that you're starting to close down below moving averages, etc., it still has some juice in there, guys. All right. Final chart, silver, monthly chart. And every time I look at silver, it's like there's a spot. But when I look at the futures contract, I come back to here and I always think that in May we actually broke out. And that right now we're consolidating above that breakout right here that we had in May. And now this level right here, it's a monthly defined support. We had that old price action below, but the Wixie closed above. And right now we're starting the next month of July. We're hitting that resistance. It could actually dip below, but by the end of the month, I believe that it's going to close above. We have also that descending trend line, angled trend line. One hit, a little bit above. 2, 3, 4, 5 hits. Also giving that a signal that we actually broke out in May. But we're kind of trapped, right? So we're breaking out, really trend changing. But there is important support resistance above us that we've seen previously. That's there. But then, okay, Pat, before taking a decision, then I look at the volume profiling. This line here is the point of control. They call where there's the most volume for the price action, and we were above it. So in May, super important candle in May, close above the peak volume, close above that monthly defined breakout line, slanted, and we even closed above the horizontal breakout line, and always based on closes, right? So, white candle can't close above, even if it gaps up. It's the closes of those white candles. For me, that's the hard stop. Market saying we can't close them above that. And right here, look where we are here. So sometimes you look and then you see this and your eyes are skewed, but actually draw where you are. We're already starting, look at that, sliding down. This is support right now. This is super, super duper important support. The market has decided, or is in the process, is continuing to decide that this is the direction where it wants to go. And here you have another volume node, and that one is probably some volume defined resistance right here, right below $20, where we're stuck in between. So we could consolidate right here in between, in this region right here. And after that, once we break out, look at that vacuum until next volume node, around $29, $27. And there's not much after that, guys. So the hard work's here. Buy right, sit tight. You're right there. You remember, sometimes you see that gif of that picture of that guy mining. There's two guys mining, one top of the other. And one of them just turns back at the last second, and because he gives up, and the other one continues and hits the diamonds, pay dirt. Or you're right there, right there. So forget the noise, unless you're trading and you're looking for signals on smaller time frames. The higher time frame is right now we're consolidating above a potential breakout line. But if you look at the rest of the complex, the gold sector completely breaking out, silver following in the footsteps. It's looking pretty good, guys. And is silver extended? Look at the Bollinger Bands. You're well within it. So it's really soft. It's you're not overextended, overbought by any means on the silver chart, on the monthly chart. So for me, it's all go ahead. Your model should be buy right, sit tight, and hold on and check out how the precious metal sector is going to perform over the next 3 to 6 months, guys. All right. Thanks for watching. Don't forget to subscribe. Bye.